So the topics that we're covering off, and I think we're going to do both at once tonight, is workers' comp and payroll tax as well. So the limitation of what we're talking about is obviously workers' comp in New South Wales and payroll tax in New South Wales, because that's probably where it's most relevant to us. So the first part was what's to be included on the workers' comp declaration. So I'll try and make it a bit interactive. So what kind of things do you think would generally be included as part of the workers' comp declaration in terms of, is it wages, salaries, obviously, super, yeah. Contractors, yeah. Salary sacrifice, super, yeah. Allowances, overtime, over award payments, bonuses, commission, payments to working directors, Dean, including directors' fees. Thanks very much. Payments to piece workers, value substitutes for cash. So there's quite a few things that it covers that probably are just a bit off the radar, that aren't as common as what your standard salary and wages, directors' fees, super, that type of stuff is. Leave loading, leave payments. Yeah. So long service leave. Yep. Yep.
Pretty much everything.
Everything, yeah. Termination
Except
payments.
what doesn't it include?
Employee benefits. Trust distributions, where the distribution's in lieu of a wage. So this might answer part of your question, Dean. So if you've got a working director that's operating out of a family trust structure, you'll have a deemed wage for working directors if they're not paid a wage, or if they're paid a trust distribution. The trust distribution will be counted for workers' comp if they're a working director.
Distribution, can you define that?
Trust distribution is a distribution from a discretionary trust, so net income of the trust distributed to whoever the beneficiaries are deemed to be at 30 June.
It goes in their personal tax returns.
So it goes in their personal tax returns. So often what some people with working directors will do is say, well, I'm not going to pay you a wage. So you might have $100,000 profit in the business and say, I'm not going to have a working director draw out a wage or a director's fee of 50 or $100,000 for that matter, to bring that profit back to nil. They try and pay them out of trust distribution. So those trust distributions will often get captured for workers' comp purposes as well. Apprentices, so it includes your apprentice wages, but you also get a premium reduction as well with apprentices. So it's important to
Include it and then state it separately.
Yeah, state it separately, absolutely. So particularly where they can get missed, so you want to make sure whether you identify them separately or make it really clear that these couple of employees are apprentices, because like I say, it does reduce your premium. There's also exempt employers as well, so if you've got less than $7,500 in wages per annum, you're an exempt employer. You're not required to hold a workers' comp policy in New South Wales. So that's probably doesn't cover off on too many of your clients, I wouldn't imagine, if they're paying less than $7,500 in wages. Who's filled out workers' comp forms on behalf of clients? Yeah, so pretty much everyone. Yeah. So that brings us to the next section. Who's to complete the document? You guys. So bookkeepers, business owners, or the employer, accountants like us potentially, but basically it's anyone that's authorised by the employer to complete that form. So as long as they've authorised that person to complete it, then they're able to sign on their behalf and lodge that workers' comp declaration form. Does the description affect the pricing? So if I work in a dangerous industry, or if I've got a mining business with mining equipment, is that going to be a bit different to an accounting business or a bookkeeping firm or a bookkeeping business? Yeah.
So say a small business, they might have an electrical business.
Yeah.
So obviously the 3 electricians are going to be at higher risk than the 2 admin people.
Yeah.
Years ago you could split the difference between the admin and the workers, but I don't think you can anymore.
You can't. It goes to whatever the majority of the business relates to. So if you've got 1 admin and 5 electricians, well, unfortunately the admin worker gets based on whatever the rate is for the electrician.
Can you look that up yourself to try and work out what's best?
You
it's
can.
a 50-50 situation. How do you determine if you put the wrong one down, then you might be charged 51% rather than 49? But there doesn't seem to be any. It's like a guessing game. You don't even know what you're.
Workers' comp in New South Wales is regulated by WorkCover, and it's also legislated through. There's a couple of different acts that it's legislated through, but if you go to the WorkCover website, there's mountains of information, and if you look at specifically at Schedule 15 Table B that I was looking at today, which is quite interesting, there's WorkCover industry classification systems, and they actually have a list and I was going to print one of them off, but I think it was about 160 pages. And I think the index itself was about a dozen pages. So, and it has all the different industries, like all the different business types and what types of industries. So you can actually go through and look at those specifically. Now, the calculations behind the workers' comp premiums are a little bit more complex.
A little bit.
Well, I don't understand them, and I wouldn't try and calculate it on behalf of an employer. But you can work out what what their basic rate is. Yeah, and work cover are pretty like any, like the OSR with payroll tax. You can ring them up, you can ask them questions, bring them up anonymously if you've got specific issues, and they'll guide you in the right direction as well. So, like you say, if you're going, I've got this industry that I'm really unclear on as to what industry I should be putting on the form, just give them a call because they are really helpful, and they will give you the information that you need. They want people to get it right. They're more about educating than going, you didn't have the right industry or you didn't have the right figure or whatever it is. So obviously work cover are out there to protect the employees, so people who don't have workers' comp in place. And I had a client who did a restructured, and this is only just recently, and we have a pretty comprehensive checklist. When a client does a restructure, we say these are the things you need to do. You need to set up new bank accounts, you need new ABN, you need to advise all your suppliers, you need to open new bank accounts, you need to put new workers' comp in place under the new entity, other insurances, you need to transfer everything across. So this particular client had asked his admin assistant to put the new workers' comp policy in place under the new entity, and it never happened, and he never followed it up. So he actually had a worker who was injured in the time that he didn't have that policy in place, and it's looking like this particular employee needs an operation, and the first bill come through the other day for about 10 grand, and he thinks it's going to be in excess of $100,000. So when you start to think of situations like that, and it's very rare that you see something like that, but when you do, you kind of go, okay, well, it's really there to protect people, protect the employee, and protect the employer at the end of the day as well. Like it's there for that exact reason. So that's a bit of a horror story. I've got a few for every different for every different thing, but I tell a similar story where a client. I know Brett's talking about super, but I had a client at the old place I previously worked at, and they had an employee who started on the 26th of March, I think it was. So there's a couple of working days prior to the end of the quarter, obviously. Now, the owners went overseas subsequent to the end of the quarter. The new employee hadn't filled out a super choice form. The employee died in a car accident not too long after that. They were overseas, hadn't put her in a default fund. So the parents obviously come back and said, well, we don't have life insurance because she's not in a super fund. Otherwise we would have life insurance. We're going to sue you. I don't know what the end result was because I wasn't there to see the end of it. But there's always bad stories, but most of the time, 99.9% of the time, people do the right thing. Sometimes they're genuine mistakes though, where in this guy's case he didn't really mean to. It does affect the pricing. Obviously the factors are what industry they operate in. That schedule that I referred you to before will be helpful in that regard. There's other factors that affect the pricing, obviously, which is the amount of wages you pay, obviously, so obvious things that you're probably already aware of. Cost of any claims made by your workers as well will affect your premium. And there's a guy in town that I think he's in Derby Street somewhere, and all he does is workers' comp, so he just deals with workers' comp premiums, no other insurances, and basically one day I met with him and he said that where there's been a claim in prior years, whatever the dollar value of the claim, don't quote me on this, but whatever the dollar value of the claim is, the premium increases by 50 cents in the dollar for every dollar of the claim. So it's quite an expensive increase in premium when you consider it from that angle. And he told me he has quite a bit of success in getting better deals for clients through different insurers and stuff like that. So if you do have clients who have had a claim against them and they're looking to maybe review their premiums, I can find the guy's details. Maybe Sue can put it on the website or something as well. Obviously any incentives, discounts, premiums, so the apprentices and stuff like that will also affect your premium, reduce your premium. We spoke briefly before about what do you need to in order to estimate wages. So it used to be that you would estimate the following 12 months, they'd issue you with a workers' comp premium based on that estimated wages. They don't do that for small business anymore. So basically what they do is 4 to 6 weeks prior to the premium expiring, they'll send you out a renewal letter. So like you get your motor vehicle registration insurance, they'll send a renewal letter out for that. And then within 4 months, they give you 4 months to provide your actual wages for that 12-month period. And then they'll assess you based on those actual wages and whatever else we discussed earlier that needs to be included on there as well. Now, if you don't submit that, they'll just whack a 30% premium on top of whatever last year's was. They'll just assume a 30% premium. So it's obviously in people's best interest to get it sorted and get it in by that 4 months due date. There is a premium estimator online as well, so this might be helpful as well, Dean. I know there's one on the QBE website in particular, and I'm sure there's dozens of them out there. But you can go in and put your wages and or your relevant costs in there, what type of industry they are, and run through this calculator, and it'll give you an estimate of what those premiums are for that particular client as well. So most people are going to have workers' comp premiums, and they would have had one prior year, so that might be particularly relevant where maybe there's a significant change in employees or a significant change in costs associated with employees. Might be where you've got a new business where they're going, oh geez, I need to do workers' comp, what's that going to cost me a year? So the estimator might be helpful there. Or where you've changed industry, so it might be where a client's gone, we're actually doing things a little bit differently. We were in this industry, but now we're doing most of our work in this industry, and it might result in a significant jump in the premium tariff for whatever that particular industry is. So,
Is it worth shopping around? Is there different pricing within the different?
They're all pretty competitive from what I understand, because there's not much competition. But as I said, if you have, I think the guy's name actually is Dennis Hardman.
Can you actually get quotes?
Yeah.
But they sort of regulated the industry to standardise the premiums.
Yeah.
I think that's why you don't really have to shop around. But I know what you're talking about there. If you've got a bad rating, say, so you're going to one particular fund and you've got a number 4 rating, this guy might be able to give you a number 5 rating. Yeah, but absolutely. I think that all of the pricing pretty competitive.
The premiums are done by exactly what you said.
They're regulated.
Yeah, that's what I'm saying. It is.
Would be the same.
Yeah, they are, absolutely. They're all the same. So if you and I have an identical business, same employees, we're going to get the same rate. It's based on a calculation that is a set calculation. But if I've had 2 employees who have claimed against me in prior years as a workers' comp claim and you've had none, my premium is obviously going to be higher than what yours is. And so what Dennis Hardman was telling me is, from Hardman's Risk Insurance, he's saying that he's got some really good relationships within QBE and some of these other insurers that look after workers' comp, and he reckons that he can go back and fight for you. They charge a fee for service or whatever it is, but it might, if you're paying $1 million in wages a year and your premium then jumps 1% or 2%, that's quite a big number. So for a couple of grand or whatever they charge, I haven't used them personally, and I don't never need to. But
they can save a lot.
They can save you a lot of money, particularly in those types of industries. So, someone asked a question earlier about contractors. So this is a bit of a contentious one because. Particularly, it's workers' comp and workers' comp super and payroll, I suppose, for that matter. So the way that workers' comp will look at it is whether they're a contractor or whether they're a worker or an employee. Now, there's a couple of different things that they'll look at to determine that. There's actually some online. The ATO has some online decision tools that you can use as well. But basically, a contractor. Is more likely to be engaged to carry out a particular task using his or her own skill or judgment. They're likely to employ others, delegate or sublet to other people, so they might have subcontractors working for them or other employees that they delegate the work to. They're usually paid on the basis of a quotation of a job, so as opposed to an hourly rate. So they're paid to produce an outcome rather than paid an hourly rate to work for however many hours. They usually supply their own tools and their own materials as well, if they're a contractor. And they usually obviously carry on an independent business in his or her own name as well. So there's particularly where you've got a sole trader or an individual contracting to another business. It's a lot more, well, I shouldn't say it's a lot more difficult. It's a lot easier to prove that if I've got a proprietary limited company or a trust or something and I'm contracting to your business, there's no argument as to whether it's me as an employee because I'm contracting from another entity. So whereas if I'm contracting as a sole trader to your business, it could be looked at as I'm just an employee if I satisfy some of these conditions as a worker, as an employee. So, you know, if I'm subject to the direction of the employer, required to, if I'm personally actually required to carry out the work, if I'm paid on a time basis, if I'm using the tools and the materials of the employer or the person doing the work, if I work exclusively for a single employer as well, and more likely to be affected by pay-as-you-go tax arrangements, well then they're the types of things that workers' comp would look at and say, well, you're probably more likely to be an employee, and basically all you're trying to do is to avoid paying workers' comp. Back in I think it was back in 2000 roughly, there was all these the IT guys started, and this was more around the income splitting and PSI rules, but basically what happened is they left work on the Friday, they come back on the Monday and said, we're no longer employees, we're actually contractors, and we're now going to invoice you for the work that we're doing. But they're doing 100% of their work for that employer. So from a workers' comp point of view, and like I said, that was more personal services income and being able to income split from them to their wives or kids or whoever, other beneficiaries. But in that case, particularly for workers' comp, they're more likely to look at it and go, okay, well, really all you're doing is saying, well, I'm taking away my employment and I'm just replacing it with an interposed entity, or me as a sole trader. Essentially, you're just an employee of that business anyway. So they're the types of things that they would look at.